The rate was cut by 50 basis points. More cuts on the way, you're saying as well. Thing number one, Gary, the Fed pivot is here.
Yeah, so the Fed pivot is here. This is the moment that people have been waiting for almost 3 years. But last week, the Federal Reserve completed their September meeting. And prior to the meeting, everybody knew the Fed was going to cut rates. They started hiking in January of 2022. And the thing that I think is really interesting about this is Chairman Powell, over the last 2.5 years, has been very clear saying we are going to get inflation down to that 2% target, which, as I've said many times, is 2% too high. But, whatever. Powell and I disagree, and that's just the nature of the world. But it did look for a long time like he was going to hold the line on that 2%. Instead, I think the Federal Reserve has realized the thing that Rob, you and I have been talking about for more than a year at this point, which is they're seeing a bifurcated economy. I think they're starting to understand that the employment numbers are fake, that the aggregate economic numbers look good, but it's supported by huge amounts of spending out of the government, and that most people, most Americans are not doing so great right now. Inflation is understated, and um, it's running well ahead of people's wage gains. And so while the employment market isn't awful, the inflation market is awful. And so for that reason, I think that's the reason they pivoted and cut, in my opinion, early. Um, I would have liked to have seen them wait longer, but I get the logic here. The thing that was a surprise to me was they went with the larger 50 basis point cut. That's 0.5% instead of, some of us, including me, expected a 25 basis point cut, a quarter of a point. 1 basis point is 1/100th of a percent. And, I think the reason for that is they're seeing the same things we are, which is most Americans are not doing so great at the moment.
Gary, you mentioned, you thought 25 basis points. Now it's 50. You still maintain that you think the cut is unwise. Obviously, you talked about the 2% inflation target, 8 million jobs available. But then also, most importantly, Congress just does not seem to get it, right? And in terms of this being a bipartisan problem, whether red or blue, the amount of spending that is going on at Congress is going to continue to have this be a topic of the five things for probably a while to come.
Yeah, and I think that's the key point here, Rob. What is causing our inflation right now is not the current policy out of the Federal Reserve. It is overspending from Congress. Historically, the Democrats had been the party of big spending and big government programs, and Republicans had been the party of fiscal conservatism. That is no longer the case. Both parties now are in favor of insane spending levels, and nobody has, on either side, on either Team Red or Team Blue, has any plans to cut spending. They're not even talking about it. So it is a bipartisan problem. We're not taking sides at DKI. We talk about policy, but not politics. But this is one of those situations where I disagree with both parties. So, if you have a problem with that, put it in the comments and, we'll read it. But that's where we are. More importantly than all of this, I just want to make two key points. One is, as we're talking about this, Andrew's going to put up the chart of our inflation from the 60s and 70s and compare it to what we've had in the US over the last 11 years. And those charts overlap. And you can see where then Chairman Arthur Burns cut rates too soon, and we just got this huge spike up in inflation. And that's exactly where we are in this part of that. Now, that's why I'm saying I think Powell cut too early. I think that cut, that 50 basis point cut and the Fed, they're going to cut another 50 basis points between now and the end of the year. They've made that clear. But that cutting into massive amounts of congressional overspending, again, both parties, is what is going to keep this inflation problem going. And, this is not going to be a 3-year problem. This is going to be a problem for a lot longer than that. But, the key point is it's easy to get upset about all this. And the message that I have for everybody is we get the market we get the conditions we get, not the ones we want. And if your reaction to that is to be unhappy, then I'm sorry, but there are better options. As usual, at DKI, we're going to invest based on the market that we have. Our portfolio is well prepared for higher inflation over the next few years. We're very heavily hedged. We own things like uranium, oil, energy, gold, Bitcoin, silver, things that will do well in an inflationary environment. And, the other thing I would add is our last our last three individual stock picks, not commodities, not Bitcoin, not gold. Our last three stock picks have been very high revenue growth, high potential return companies that I think are not economically sensitive and will continue to grow revenue at a high level regardless of future Fed actions. So the point of all this is you may not like what's happening. I don't like what's happening. But when it comes to investing, there's always something that you can do. There's always a way to position yourself to make money from policy that you disagree with. And so the key thing isn't whether I agree or disagree with the Fed, whether I agree or disagree with Powell. The key thing is that we're positioning our portfolio to take advantage of this and make money in, if the environment isn't the one we want, it doesn't matter. It's still our job to make money. And that's what we're focused on.